Good morning, Jason.
Evgeny, good to see you.
So there's a new kind of magic word for the last couple of years called fintech. And
Yes.
I'm not sure everybody understands. It's not fins, it's not related to tech as well. It's probably finance. Can you kind of explain what does it actually mean?
Yeah, sure. Fintech is basically a technology sector, or it's the merger of finance and technology, and really it's a sector of startups that exist because traditional finance has been slow to adopt or transform itself forever. So basically, what you have is a very very broad category of industries, and anything that touches your personal finance, whether that be investing, insurance, tax planning, all kind of falls under this large fintech umbrella.
So is a bank a fintech?
A bank can have a fintech as a side startup, but more often than not, these are very independent companies that take a very non-bank view of their business model and specifically challenge the underlying profit models of existing bank infrastructure. So as we know, large existing companies, they have a hard time challenging their underlying revenue models, right? This is the entire innovator's dilemma problem. So you have a lot of companies that have come around and changed the entire model for how they do things. So robo-advisors that invest your money for anywhere between, in some cases in the US, let's call it as low as 15 basis points to 0.5%, whereas the traditional advisor would charge you 1% or more. You have challenger banks, so alternatives to banks that basically charge you no fees and make most of their money just from interchange fees. FX brokers that basically do not that lets you hold currencies in multiple wallets, like one wallet that holds multiple currencies, and give you a fair midpoint rate at all times because they're making money in other ways. So these are whereas traditional vendors can open them up, they have a really, really hard time doing so because they're always trying to replicate the profit model in a new environment, and that's very hard.
I'm guessing the banks, if they want to innovate, can also go and add fintech companies to the portfolio on the back end.
We haven't really seen that so much, and we've actually seen them specifically in the robo-advisors try and fail miserably. So case in point, like I said earlier, you have robo-advisors that will take you for $1, start you at 50 basis points, go down to something like 30 basis points, depending on size, plus the cost of the ETFs. And you had every major bank in Canada, for example, open up their own robo or something, almost all of them. And they all replicated the old business model: account fees, minimums, transaction costs, all of it. So when you compared apples to oranges, it was dead in the water. So again, it's really they're really reticent to undercut their traditional revenue models.
Is this only about finance part, or it may be around finance? For example, if I need to go and ask for a loan or have a new bank account, they need to understand that who is Evgeny.
Yeah.
In a traditional model, it takes a long time. I need to send a void check, picture of my dog, and all this good stuff. Is fintech company supposed to help there as well, to have a quicker API, have a picture of my driving license, some kind of image recognition, and say, yeah, it's you?
So funny story. First time I downloaded a robo-advisor app just to test it out, I managed to fund to go through all the checks and fund it inside of 5 minutes. And immediately I was impressed, and then I was enraged. And I was enraged because my day job is a financial planner. And the amount of work it would take for me to do that was hours for staff to prep paperwork, to go back and forth with compliance, all kinds of stuff. So they have done a wonderful job of showing us the friction can be absolutely decimated in this industry. And especially in the lending side too, you'll see that. Whereas I remember the last time I applied for a small business loan with a new bank, it took weeks to get an answer. I went to an alternative lender who basically, of course, did things like pinged various API sources of identity. They pulled data from my bank accounts. They pulled data from my accounting software, all through a 5-minute onboarding process, and got back to me inside of 24 hours with an offer. So, it's not just about the investment part or the insurance or the lending part. It's about the entire infrastructure and the experience around that. And that's really where they're differentiating. Everybody's kind of focusing on one or two small things and just making that experience so smooth and so slick.
So we just spoke about fintech and the end user, and maybe the banks. What about fintech and small and medium businesses? Where they can help them?
So in Canada, that's a harder problem. And the problem lies with KYC and anti-money laundering legislation. So the issue is you have to, of course, confirm who it is you're dealing with and who the interested parties are and all of that. There is no central registry of interested parties that exists currently that can be pinged through an API. So there's still a lot of heavy lifting and paperwork and verification needs to be happening. So you're not seeing a lot of work being done on the business side. You're seeing a couple of players do it, and they're figuring out ways around it. However, that said, there is legislation now to actually create that registry. If and when that gets running, you'll be able to see onboarding of businesses within 5 minutes yet again. So, but what are they doing? I think the biggest thing that they're doing in the business space is, at this point, from what I've seen, specifically around lending solutions, peer-to-peer lending solutions, or other issues. Whereas, dealing with the banks on these things is just onerous. And the old saying is, if you want an egg from the bank, you got to give them a chicken. Well, that's pretty much it. They just basically, they want total security on everything. Whereas these lenders, they, on peer-to-peer, there's a risk appetite that's greater than the banks.
My dad always told me, try to stick in the stuff you're good and not in the stuff you don't know how to do it. So my main work, at least mainly, is cybersecurity. And I'm kind of concerned about the part that if some kind of company that probably understand finance wants my information, I'm going to save my information somewhere. What's going on there? Like, do people need to be concerned because now this small fintech company will have a lot of information about me?
No, I don't think so. Here's the thing. They're going to have the same kind of information as a traditional bricks and mortar bank. But realize this, they're not just existing in a vacuum. In Canada, we have a highly regulated infrastructure system just to monitor these things. So, the Wealthsimples of the world are going through the likes of the OSC and the CSA to get approval. So they're subject to the same kind of audits and the same kind of requirements as a traditional bank. So, in most cases, and I'm not saying that applies to every last vertical. The crypto exchanges, for example, are just now getting into proper regulation. But the reality is that these guys are all part of various products and infrastructures and support systems that existed before them. And a lot of them actually use some innovative banks on the back end. So, they still have their standards. So, this is not exactly the Wild West. These companies are coming into a regulatory framework where they cannot operate without compliance. So I would say, if anything, frankly, I'd be more worried about the bricks and mortar.
And I know from my perspective, I played with some of the cryptocurrencies and some other apps as well. I always enable multi-factor authentication.
Well, and I would also say that these fintechs, for the most part, most of them have launched with better security than the banks had at the time, or still do. So, for example, multi-factor, not just multi-factor, which is the SMS-based one, which we know is probably one of the weakest forms out there, right? They will use the various Google Authenticator tokenized versions, right? So they'll have, several of them will have multiple versions that you can choose from, and some of them more secure than others, of course. And then the other thing is that the most popular prevalent way for getting data from a bank or financial institution to date is typically screen scraping, right? And we know that is not as secure because you're basically putting your password to a third party, and they got to utilize that, and then they got to protect it. Whereas some of the vendors out there have basically opened up their APIs and created more secure methodologies for transferring data between institutions. So there's that aspect as well.
I know you also have your own podcast around fintech, and we're going to link later on. But I'm wondering, how many fintech companies right now exist that you're aware?
Oh, good God. It's, I've seen reports, but, a perfect example. I came across an image the other day, 2 days ago, of just the number of fintech unicorns that exist in the world. And at this point, those on an 8.5 by 11 page, those logos are starting to get to like 4 or 5 centimeters wide. That's how many there are. This is a huge category in most countries. And the reason why is, when you think about how unuser friendly the traditional bank experience has been, or financial institution experience has been, there's a tremendous amount of opportunity to disrupt it. And what's happening is you're seeing multiple players for every specific vertical within a financial institution. And you have, in every country, you have a couple that come to dominate. And you have a couple that come to basically go international. But Canada already is home to 2 fintech unicorns, and probably more to come. But there are banks out there. There are challenger banks out there in the world that actually have more depositors in place in 4 to 5 years of life than a major bank in Canada has in over 100 years. Right. So that gives you an idea of the scale and opportunity. You don't have to be all things to all people. You can be one thing incredibly well. And that's really compelling to people. And the net promoter scores are showing that these people are making consumers very happy.
Jason, thank you very much. It was a pleasure.
My pleasure. All right. Thank you.